Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's Monday, December 5th, 2022. Top of the week, and we're at the top of the news, so let's go. Circle has announced that its proposed merger with Concord Acquisition has been terminated. This deal, which was originally announced in July of 2021, was amended in February of this year when Circle's valuation increased to $9 billion. USDC is currently the second largest stablecoin in circulation with a market cap of $43 billion. Under the terms of this agreement, Concord had until December 10th to complete this transaction. However, it appears that the company has chosen to let the deadline lapse instead. Circle CEO Jeremy Allaire said that although the proposed merger with Concord Acquisition has been terminated, the company will continue to benefit from the advice and support of Bob Diamond and the Concord team. Allaire added that becoming a public company remains part of Circle's core strategy to enhance trust and transparency. Circle announced that it became profitable in Q3 of this year, with total revenue and reserve interest income of $274 million and a net income of $43 million. The company currently has $400 million in unrestricted cash. The ongoing crypto winter and poor performance of SPAC mergers may have contributed to the termination of the deal. Israeli cryptocurrency exchange eToro also terminated its $10 billion SPAC merger earlier this year. The UK Treasury is finalizing a plan for cryptocurrency regulation. This plan includes sweeping changes to the way cryptocurrency industry interacts with foreign companies. This comes in the wake of the FTX downfall, which has made cryptocurrency regulation a top news item. The UK is the first country to take action on the issue with regulatory legislation. Cryptocurrency regulation has been a hot topic in the financial sector. The debate over whether platforms and companies should be regulated and how that aligns with crypto ideals has always been interesting. However, the collapse of FTX and the potential loss of customer funds has shifted the conversation. In response, the UK is finalizing a plan to regulate crypto in the country. This move is aimed at preventing another FTX-type situation. And so, the Financial Times reported that the UK Treasury is finalizing a plan for cryptocurrency regulation. And this goes back to something that we were talking about last week, because the plan includes, quote, sweeping rules and covers issues such as limits on foreign companies selling into the UK, provisions for dealing with the collapse of companies, and restrictions on advertising products. A consultation on the new regulatory regime will be launched soon. This action follows the Prime Minister's call for effective regulation in the cryptocurrency industry. The Financial Conduct Authority has been investigating UK-based crypto firms this year. The new regulations will give the FCA more power to oversee the industry. This coincides with a bill in Parliament that outlines the UK's approach to financial regulation after Brexit. An amendment to the bill in October includes provisions for cryptocurrency regulation. The bankruptcy of FTX and its affiliated trading firm Alameda Research is a big setback for the cryptocurrency industry. However, the Bank of America sees some potential positive outcomes. According to a research report from the bank, this bankruptcy may lead to increased regulation, which could encourage more institutional involvement in the crypto space. This, in turn, could shift the focus of the industry from speculative trading to projects with real-world functionality and companies with viable business plans. Overall, the report emphasizes the importance of regulatory frameworks for the crypto industry in order to promote mainstream adoption and protect customers and investors. FTX's bankruptcy has highlighted the need for strong regulation in the cryptocurrency industry. This regulation should create a clear legal framework for digital assets, encourage technological innovation, protect consumers and investors, and reduce financial risks. Bank of America notes that while the top 100 crypto tokens have declined significantly this year, they are still up significantly since the end of 2016. They also emphasize that it is important for policymakers to take digital assets seriously and not ignore their potential. This report from Bank of America notes that the development of blockchains with smart contract capabilities and applications with real-world use has increased this year. Although speculative trading is common in the crypto space, it is the underlying blockchain technology that has the potential to be truly revolutionary. The report also states that the recent bankruptcy of FTX may lead to a decrease in retail and institutional interest in crypto, which could put further downward pressure on prices. However, the report points out that crypto prices have shown some resilience, falling by 22% between November 2nd and November 10th, before rising 6% through November 25th. This suggests that investors may be moving on and focusing on the long-term potential of blockchain technology. The activities of offshore crypto companies operating in the European Union are being closely scrutinized by regulators in the wake of FTX's collapse. The European Securities and Markets Authority is responsible for implementing the Markets in Crypto Assets regulation, which is expected to be enacted in 2024 at the earliest. Jan Sesens, the head of digital finance in the European Commission, said that all member states will have the power to, quote, bring down advertisements and websites for unauthorized crypto venues. He added, quote, once MiCA will be there, authorities will track down those who may still be active but not have the authorization. He said that common guidelines from the European Securities and Markets Authority will help determine what is considered reverse solicitation, which allows offshore companies to access the EU market without a license. Now, we talked about it last week where the issue of reverse solicitation was raised during a hearing at the European Parliament. Stefan Kern, head of Risk Analysis and Economics Department at ESMA, said that reverse solicitation is a, quote, particularly pronounced problem in the crypto market and is a concern for regulators. Kern also noted that players outside the EU are expected to continue playing a dominant role in the crypto market. In the naughty category, Maple Finance has announced that it will cut ties with orthogonal trading due to allegations of misrepresentation of finances following the collapse of FTX. Maple Finance says that orthogonal trading misrepresented its finances over the last 4 weeks and only recently admitted that it could not make loan repayments. This means that the company had been operating while effectively insolvent. Maple Finance does not want to work with, quote, bad actors who misrepresent their finances and will pursue legal action to recover any funds. Maple Finance has terminated its relationship with Orthogonal Credit, but will still use its smart contract to protect assets in the Orthogonal Credit pool. Maple says that this will not impact lenders in the pool and that all loans remain active with no signs of distress. The team at Orthogonal Credit has acted with integrity and professionalism and is currently seeking strategic solutions as an independent entity. The collapse of FTX and Alameda Research is continuing to have consequences within the cryptocurrency community. In November, Orthogonal Credit disclosed that it had closed Alameda Research's dedicated borrower pool on Maple Finance in the second quarter of 2022 after identifying weaknesses during its due diligence. Orthogonal Credit announced on Twitter that it had identified several critical weaknesses during due diligence earlier this year. These included declining asset quality and unclear capital policy. As a result, the firm halted Alameda loans on Maple Finance in May after issuing $288 million in loans into a pool dedicated to Alameda between November 2021 and May of 2022. According to Elon Musk, adding crypto payments would be a natural fit. In a recent Twitter Spaces hosted by Mario Nawfal, Musk discussed his vision for the future of Twitter, which includes the ability to transact in both digital and traditional currencies. These comments come as rumors circulate that Twitter may be working on its own cryptocurrency. A researcher named Jane Manchung Wong claimed to have found evidence of a, quote, Twitter coin within the platform's web app, but her account is no longer active on Twitter, and all tweets regarding possible crypto integration have been deleted. Now, he said that he believes that crypto assets will ultimately act as a check on central banks and global monetary policies. In his view, crypto provides competition to the fiat system and can prevent it from becoming overly restrictive. That said, he does not see much use for government-controlled central bank digital currencies, as much of the monetary system is already digital. Musk believes that people will use the cryptocurrencies that they think will accrue value over time and not use the ones that don't. Speaking of CBDCs, the Bank of Indonesia has announced plans to launch their own central bank digital currency. The bank's governor stated that the bank will release details on the design of a digital rupiah and open it up for public comment. The bank intends for the digital currency to be integrated with other countries' CBDCs. The initiative, called Project Garuda, will begin with a wholesale digital rupiah for certain transactions and will eventually expand to include end-to-end transactions between wholesale and retail users. They emphasize the importance of collaboration for the success of the digital currency. In 2017, Indonesia banned the use of cryptocurrencies for payment. However, trading in digital assets is still legal in the country and regulated by the Commodity Future Trading Regulatory Agency. In May of 2021, the governor of the Bank of Indonesia announced plans for the country to introduce a CBDC, but did not provide a specific timeline for its release. Meanwhile, the State Bank of Pakistan has signed new laws for electronic monetary institutions to ensure the timely issuance of a central bank digital currency in the next 3 years. The World Bank helped Pakistan design the new regulations. The new laws include measures against money laundering and terror financing, as well as consumer protection and reporting requirements. The state bank will issue licenses to EMIs for CBDC issuance. Finance Minister Asad Umar said using EMIs in promoting the digital economy will safeguard financial institutions from cybersecurity threats. Deputy Governor Jamil Ahmad said the regulations are a commitment to the adoption of technology and the digitization of the financial system. Pakistan is one of almost 100 countries actively researching and launching central bank digital currency initiatives. India has also recently joined the race to launch its own CBDC. The Reserve Bank of India announced plans to launch a retail CBDC pilot by the end of 2022. The pilot will reportedly be tested among 10 to 50,000 users of participating banks. Nexo is phasing out its operations in the United States. In a statement, the cryptocurrency lending platform cited a dead end in talks with U.S. regulators and a recent investigation by state regulators and the Federal Consumer Financial Protection Bureau into its EARN offering. Nexo said that it was crystal clear that the CFPB insisted it had jurisdiction over the product, which the SEC and state regulators have claimed is a security subject to their jurisdictions. On Thursday, the CFPB rejected a petition from Nexo to cease its investigation. Despite this, Nexo said that it was not happy with U.S. regulators. In addition to its issues with U.S. regulators, Nexo also criticized state securities regulators for filing actions against the company without advance notice. Nexo cited the SEC's $100 million fine against BlockFi as a reason for CFPB to drop its investigation, but state regulators still sent the company cease and desist letters in September. Nexo, which has a large portion of its operations in Bulgaria, had already announced it would no longer pay interest on new EARN deposits from the U.S. The firm is now the last major crypto lending platform functioning, as competitors like BlockFi, Celsius, and Voyager have filed for bankruptcy protection. Disgraced Sam Bankman-Fried has claimed that the testimony given by the new FTX CEO John J. Ray III is false. In a bankruptcy deposition on November 17th, Ray criticized the poor record-keeping and untrustworthy financial information at FTX, which had filed for Chapter 11 bankruptcy in Delaware on November 11th. In an interview released on Monday, Sam stated that he knew of, quote, statements that have been made, that have been put on legal record, that I knew to be false. Bankman-Fried also stated that there have been instances where it had been claimed that something did not exist, yet he has a copy of it. He added that the falsehoods could either be lying or honest mistakes. He also mentioned that Ray and his team have not responded to his emails regarding the issue. He said that it's difficult to know where relevant data, including company books and documented policies, would be if you try to take over a company without speaking to anyone involved in running it. In response to a question about the new CEO's comments on poor financial controls, Sam disputed the claim that there were zero financial controls. Now, he agreed that there were areas with poor controls, but stated that those areas were critical and that was a problem. In his earlier deposition, Ray said that he had never seen such a complete failure of corporate controls and absence of trustworthy financial information in his 40-year career, such as he did when he took over at FTX. He also mentioned that the company did not have appropriate books, records, or security controls for its digital assets, or even a full list of staff on its payroll. Ray added that the trading arm, Alameda Research, and related businesses did not keep complete records of their investments, and the court should not rely on audited financial statements that he had, quote, substantial concerns about. And Representative Maxine Waters is pushing back against SBF's dismissal of her and her invitation. Now, what happened is Waters, quote-unquote, invited SBF to come and testify before the House Financial Services Committee. Well, Waters took to Twitter today to urge Sam to attend the December 13th House Committee hearing on the collapse of FTX. She emphasized the importance of his attendance and offered to schedule additional hearings if necessary. Waters initially reached out to him on December 2nd to thank him for being candid about the collapse of the company. She invited him to testify before the House committee, but made it clear that it was not a demand or subpoena. Sam responded on Sunday, saying that he would feel it was his duty to appear before the committee and explain what happened, but he was not sure he would be able to do so by the 13th. Waters has now more forcefully emphasized the importance of him attending the hearing, expressing her impatience with his response. In her latest tweet, she emphasized the harm that the collapse of FTX has caused to over 1 million people. She emphasized that Sam's testimony would be meaningful to Congress and critical to the American people. As you might expect, the exchange between Waters and SBF has sparked significant commentary on crypto Twitter. So, okay, Maxine, here's what you do. You get word to Sam's lawyers. You tell him if he voluntarily comes in and physically testifies in person, things will be fine. He'll get a cash bail, surrender his passport, and he's out on the streets in an hour. But also tell him, if he makes you extradite him, he's going in solitary confinement 23 hours a day. So he could either turn himself in and be free or be extradited and jailed. Again, I'm not a lawyer. I don't know how legal that is, but that's what I would do. Anyway, a Chinese court has ruled that non-fungible tokens are online virtual property that should be protected under Chinese law. This ruling came from the Hangzhou Internet Court, which is a specialist internet court. In 2021, China began to crack down on cryptocurrencies, leaving NFTs in a legal gray area. The court ruled that NFTs have object characteristics of property rights and belong to virtual network property that should be protected by the laws of their country. Now, this is a case where a technology platform user sued the company for refusing to participate for a sale and canceling the purchase of an NFT. The court said that NFTs, quote, have the value of related intellectual property rights and are unique digital assets formed on the blockchain. The court also said that NFTs are subject to e-commerce laws and regulations. This follows a ruling earlier this year that said Bitcoin is subject to property laws and regulations in China. So that means that the court has ruled that NFTs are virtual property, and as such should be protected under Chinese law. China has previously banned cryptocurrencies, but has worked to support the use of non-crypto NFTs that have been paid for with fiat money. Despite this, the government has warned the public about the, quote, hidden risks of investing in NFTs. This ruling follows a similar decision by a Singaporean court which likened NFTs to physical property such as luxury watches or fine wine. Looks like we went a bit long tonight. I apologize for that. So we're going to call it right there. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.